Bank of America wants you to believe it's making a serious commitment to alternative energy. And why not? BofA Chairman Chad Holliday is something of an energy activist. Together with Bill Gates, he founded the American Energy Innovation Council. He says we can't base an economy on fossil fuels anymore. He says climate change is a real threat. And he says the United States must have a strategy to invest in clean power or get left behind by the Chinese. I sat down with Chad Holliday at the Bloomberg New Energy Finance Summit here in New York yesterday. I wanted to know how serious BofA's commitment really is. We focused on a $20 billion fund that we set up in 2007, that we've loaned over $11 billion of it now, to focus on clean energy projects. And we do that because it's taking us down the learning curve, because we think this is going to be a gigantically large market for time. If we're down the learning curve first, we can help our clients better. $20 billion. This is Bank of America's climate change initiative. Yeah, so $20 billion over 10 years.
For our customers, for our clients.
So my question to you is, why not be more ambitious than that? Because I'm going to run through the numbers very briefly, because I know a little bit about the climate change initiative. $20 billion relative to a firm of Bank of America's size is a drop in the bucket. It's less than 1% of your assets. The amount of money that you lend to alternative energy is less than 1% of your total loans outstanding. Why not put more skin in the game? Why not take more of a leadership role?
Well, I'm still in a world where $20 billion is a lot of money. But
it's a lot of money for me, but it isn't a lot of money to Bank of America.
No, and I don't want to leave the impression that's all we loan for alternative. It's in a special program where there are loans that wouldn't necessarily fly through the system the same way. So we loan much more than that to especially the supporting infrastructure that's critical of what's happening. I think it's a great start. Undoubtedly, once we get to the $20 billion, we'll look at, do we need to extend that with time?
Do financial institutions have a role to play, have a leadership role to play in this discussion? Should they take on special risks to advance alternative energy? Should you, for example, reconsider financial commitments to the coal industry at the same time?
We're working very closely with the coal industry, for example, because we have a number of great clients in that industry. Mm-hmm. We do believe mountaintop mining, when that's your primary business, it is not something that's good. So we work very heavily with our customers to move them away from that, help them understand technologies that could allow it a different way. We're also working very heavily, we have research programs ourselves with Duke University, for example, on climate CCS storage, because we think if that would be a key answer, if we could do that effectively, and we could extend the coal industry's impact on this country, it'd be a real plus with time. So we try to be an active member of finding solutions, not just no answers.
Could you be more of an active member? Could you drive more change if, for example, you took a harder line on things like mountaintop mining and said, we will not finance a company that does mountaintop mining?
We serve a broad range of clients, mm-hmm. Everyone from you to your family and Bloomberg. We need to meet the needs of all of our customers. It's not our position to say exactly what standards that people should have beyond what the legal standards are. But as we have information that we can communicate to our clients, help them see other alternatives, is very important. That's why I think the work we're doing ourselves, the $20 billion, is very important.